Hi, this is Sive Morten with the daily update on EUR/FX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So finally we could take a look and tell something about the euro currency. It is moving from its dead point where it was standing for recent few sessions. And as was expected, the CPI numbers have become really solid driver. As shown the 7.5%, it's absolute top high inflation in the United States. So actually, it was not absolute surprise, of course, because after the non-farm payrolls release and wage inflation, everybody in general were ready for just numbers might be stronger than anticipated or forecasted. But anyway, to expect and to get is a bit two different things, and you can see the market still stands under pressure of this recent event. So we see this downward action not only on euro currency. I would say that on euro currency, the action, in fact, not as strong as the other currencies. So, for example, if we take a look at the Great British Pound, here is a radical action. It's a kind of the even double top. You could treat it on an hourly chart is forming something of that sort. On Australian New Zealand dollar, our setup has worked nice. So recall what we said about the Australian dollar. So we said the same setup, ABCD pattern. Completed, start dropping. On the New Zealand dollar, the same story. The setup that we have discussed recently, we said keep watching two levels, this one and that one, whereas actually thrusting action could start. So you could see as has happened. So this setup mostly is done. I mean, starting working. So if you have taken position, that's great. If not, don't be upset with that. We will get a lot of for trading steps within the actually every day. So something happens every day mostly. So let's take a look at the euro currency. What to expect and what we could count on in the nearest time. On a daily euro currency, you could see that the market has formed a high wave pattern. In fact, the high wave usually indicates some indecision, and the advantage of this pattern is that its top and bottom works like kind of the direction determination point. So for instance, if market is moving through the lows, it means that it should go lower. If it goes through the highs, it means that it intends to go higher, because this is, as I said, in indecision range, and once market is abandoning it, it means that it sets the direction. Additional feature of this pattern is that minimum target of the downward action will be the same as the length of the pattern. That's the first point that we could keep and take a look at the daily. Additionally, we have to take a look at the dollar index, because here we have one important detail. So if we'll take a look at the weekly chart of the dollar, you could see that this week, with this recent reversal and upward action, is becoming the bullish reversal candle. So you can see market has dropped lower, below the many lows of the previous, almost all lows have been engulfed here, and closed above the top. It is not closed yet. Today it will be closing, but as you can see, it already stands above the tops of all previous candles. This is bullish reversal candle, and it suggests that maybe we will not get the upward continuation straightforward, but at least some deep retracement might happen. Sorry, not of course, this is not the weekly, of course, this is daily chart, sorry. It's daily chart. So you could see a bit different action compared to the euro currency. On the euro currency, we have high wave. Here we have bullish reversal candle. So with this in mind, we probably could suggest that downside continuation in euro currency seems more probable. And in general, this type of behavior totally corresponds to the idea that we have expressed in our weekly report. We suggest that probably the hand and shoulders might be formed here, and we suggest that at least the 50% level, somewhere around 113, potentially it may be even 1260, the 618, but at least the 50% probably could be touched. So on lower time frames, we do not have here, extension tools to set the target, because you could see that here the spike is a bit higher than this one. Actually, some kind of Russian rinse has happened here. You could treat it as a minor double top or something of that sort. But the only way we could calculate the possible extension is just to use the weight of this or height of this pattern. It's classical approach to the double top trading. Additionally, actually, this will be the same as to use the length of this high wave pattern. So from that standpoint, actually, we calculate the target based on both of them. If you count to the downside, you will get approximately 1313 area that stands very close to the 113.50% support right here. So in general, you could see this some kind of the consensus, some agreement between these two moments of extension. Stands very close to the 50% that we treat as the minimum destination point of this area. So with the light of the recent events, yes, we have here 1350. This is a strong confluence. But today, guys, we also will get the Fed meeting protocol release. And if people will read there something more hawkish, or balance of the voices that stands as more hawkish, for example, you will see that a lot of Fed chairmen have voted for 0.5% rate change in March, for example. So it could easily add some fuel to the fire of the downward direction. Personally, I think that chances that market will stop at the nearest confluence is not very significant, especially if you take a look what we have on the dollar index, and finally what we have actually on the interest rates. So if you remember our talk about this butterfly, indeed very small stop pause was made in this area. Market is keep going higher, moving above the 2%, because this is very important level. As 2.5, this is some kind of the threshold between the low reaction on the stock markets on the Fed policy when it turns to the high reaction, when other markets starts to feel the burden of the rising interest rates. So until the 2.5, this is relatively easily accepted. Above it, it's because the interest rates start challenging the dividend yield. Money becomes more expensive, and that leads to a stronger reaction on other markets, including the gold market as well. So here, as you can see, market just hits the overbought. Maybe today hardly we will get action to the 1618 extension butterfly, but this is just a question of time. And recent reaction, leaves not a lot of chances that euro currency stops somewhere in this area. I would suggest that we should better be focused on this level, this one, or even 1264. So that's actually what we have currently on the euro currency. Let's keep watching what will happen. Currently, as you can see, everything more or less is falling to our trading plan.